Hey, welcome in. You're listening to the daily version of the Corlin Economics Report. Big Al is in Vancouver, British Columbia right now, moving his chair forward so I can sit closer to my guest, Lawrence Roulston. How you doing, man?
Great to be here talking to you, Al.
Super. No, it's Lawrence is really fun to talk to on a whole bunch of subjects, but one that I find him to be particularly well versed in because of all of his travels to that part of the world is mainland China. In my humble opinion, I think that the one reason that I'm very, very comfortable in terms of continuing to invest in gold and gold mining companies is because of the actions of the Chinese. The Chinese are not stupid people, as I've said on the show a million times. They have graduated into, or I guess I should say evolved into becoming the largest gold producer in the world. They're a huge importer of gold in addition to that. There's something going on over there.
Well, absolutely. There's an enormous amount of wealth in China. There's a huge 300 million strong middle class in China that have a lot of investable money, and there's also the billionaires. So there's an incredible amount of wealth in China, and for years the biggest recipient of that wealth has been the real estate market. So real estate in the Chinese economy is extremely important.
Sure.
But there are people now that are recognizing that real estate may be getting pricey. It's not giving the kind of returns that it did in years gone by. So there's a big move among wealthy Chinese to put a significant portion of their wealth into the gold market. And that's why in the first quarter of this year, Chinese investing in the gold market it was the single most important country in terms of the investor demand for gold.
I got a question for you, and it just goes right along with what you and I are talking about, Lawrence, but the Chinese have been making some noise for a few years now about going to an international currency that is asset-based, and both the representatives from China and Sarkozy from France have said, it might make sense to go back to a gold standard as the currency of last resort internationally. Now, I had that feeling that this is what it was going to come to about 3 or 4 years ago when China really started to obviously emphasize the use of gold. You think I'm nuts?
I think for a number of reasons it's really impractical to see the world going back to a gold standard. The amount of wealth, the value of the currencies relative to the amount of gold available, it doesn't make sense on a practical level. But it's certainly on a day-to-day level, it's happening. The central banks around the world have become net buyers of gold again. So instead of sellers, as they have been over the last few years, they're now becoming net buyers. The Chinese government has made it official policy that they're going to maintain about 2% of their reserves in gold, and they're keeping that. So the reserves are growing so quickly that the Chinese government is actually buying a significant amount of gold. But beyond that, they're encouraging people, not that really the Chinese need any encouragement, but individuals are buying a lot of gold, and that's become an important part of the the wealth preservation system in China is that gold.
I see some things going on over there that are more than a little intriguing to me. Wall Street Journal reported just, very, very recently that the Chinese government was laxing their policies, for lack of better terms. They were now, lifting a ban on foreign investment, offshore investment on the part of their citizens. They were talking about letting the yuan, become a little more realistically valued, by floating against some of the other currencies. They were talking about perhaps more offshore investment into China, really kind of taking those economic barriers that were so stringent for so many years, and they're saying, you know what, it's not in our best interest to do that anymore, or for that matter, in the world's best interest. It just seems like everything is kind of coming together over there.
The economy is really opening up.
Yeah.
They're really taking more responsibility now as being an important part of the world economic scene. They're well established as the second largest economy in the world, and along with that comes a lot of obligations to participate more fully in terms of incoming investment, outgoing investment, participation in the gold market. And another element that's really important, talking about gold and China, is that the jewelry market in China there's phenomenal middle-class wealth there. The Chinese have always loved gold. So China is now the second largest market for gold on the jewelry side, second only to India. So both from an investment perspective and a jewelry perspective, China is becoming a very, very important part of the gold market.
I'm curious to get your opinion, actually. I'm curious as to what your opinion is on why do you think gold is becoming as important to the Chinese people as it is? A lot of other countries just kind of poo-poo it, for lack of better terms. The United States certainly does. There's no question about that. Why do you think it's become so important to the folks over there?
Well, gold has always been very important in the Chinese culture, and it's only re-emerging as the sort of importance that it's really held for millennia in that culture. So it's nothing new, and now that there's so much wealth in the country, it's natural that they're going to buy gold as an ornament, and concerns about the prices in the real estate market, and also concerns about the valuations in the stock market have led a number of people to take a portion of their holdings and put it into gold. Now, just to jump forward a little bit here on this whole gold theme, so that there's a big disconnect at this time between the gold bullion price and the value of the gold companies, and that's really comes back to the Chinese again. That we're seeing the gold price pushed higher as the Chinese are buying gold. They don't understand the exploration development business. They don't understand the mining companies, so they're not participating in the companies. So we've seen the bullion price pushed higher, but the companies in the gold sector kind of left out of it at this time. So we've had a very serious disconnect between the value of bullion and the value of the equities.
There is a huge disconnect right now. I can't tell you how many comments I get on our blog, on our homepage, from people who are saying, we don't understand it, it doesn't make a lot of sense. I know what I tell them. What would you tell them?
Well, I would say that over time, it's going to come back into alignment. And it's going to come into alignment as people recognize how undervalued these companies are relative to the value of bullion. So it's only a matter of time until we start seeing these companies moving into a more sensible alignment.
Final comments here on gold. I was in Germany speaking at a conference over there about 2.5 years ago, and ended up having dinner and drinking some wine with Jim Rogers, a gentleman who I really, really respect a lot. And Jim was telling Kathy and I, and this was probably in 2006, 2007 or thereabouts, we are in the most significant secular bull market in commodities I've ever seen. And I said, well, Jim, what's your time frame? And he said, probably until 2017. I kind of thought that was an odd thing for him to say, because that's a pretty significant period of time. We were talking 11, 12 years back then. But you know what, now I'm having to, I'm thinking he's probably right.
My feeling is it's going to go even longer. And the really important point here is that demand is strong right across the commodities, whether it's gold or silver or base metals or iron ore. Demand is strong and is likely to remain strong. On the supply side, there's not a lot of really big new projects coming on stream. In past cycles, we saw, when the prices went up, we saw a lot of new mine development. We're not seeing it this time. And part of the problem is there aren't a lot of really good, big, high-grade deposits to choose from, and therefore supply is going to remain constrained for a long period of time. It's going to take a lot longer than 2017 before there's enough new supply coming on stream to have a real impact that would bring the prices down.
Interesting point. Well, there you have it. A couple of guys who've been involved in this industry for a long time who are very, very bullish on the continued appreciation in the price of gold. Lawrence, thank you so much, my friend.
My pleasure.